Wealthy people tend to take a different approach to managing their money. Research shows that the rich and the ultra rich set themselves apart from the average Joe, chiefly when it comes to banking, investing, and saving. Individuals with a high net worth are keen on adopting specific banking habits that allow them to manage their cash properly, rub elbows with other like minded investors and bankers, and be exposed to unique and profitable investment opportunities. In this program, we uncover 10 banks and financial groups that specialize in helping people become multimillionaires. Even if you're currently now rolling in an ocean of cash, you can still contact some of these institutions and learn to apply some of their tactics when dealing with your own personal finances. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. We are doing fantastic today. I hope you are doing wonderful. If you are, please go grab a cup of coffee or tea or vodka and let's roll. Today, I want to talk to you about 10 banks and financial groups that specialize in helping people become multimillionaires. I didn't say millionaires, I said multimillionaires. Before we jump into the nitty gritty here, let me first give a shout out to Reggie Sutton from Grand Forks, North Dakota, Scarlett Murphy, Valley City, North Dakota, and Macy Cook, Devil's Lake, North Dakota. Reggie, Scarlett, and Macy, thank you so much for your support all the way from North Dakota. We appreciate it. Number one, private banks. Now, it's very important. What is private banking? Private banking consists of personalized financial services and products that are offered to the high net worth individuals, right? Now, the thing is that banks and other financial institutions have a separate department called private banking. And private banking includes a wide array of wealth management services, and all of those things, all of those services are provided under one roof. So services such as investing, tax services, insurance, estate planning, trust, and portfolio management are offered under the umbrella of private banking. Now, private banking is aimed at as an exclusive clientele, right? But consumer banks and brokerages of every size offer it. This is because in the last 5 to 10 years, banks have realized, especially investment banks have realized, that the demand for private banking was rising, not only on the individual side, but also on something called small business owners, but also the family offices. So now, one thing you want to understand here is that you don't need to have a lot of cash to be a client of a private bank. All you got to do, the thresholds differ from bank to bank, so you got to go to your bank and ask them. Usually, the starting amount is 50 grand. So 50,000. If you have 50,000 of investable assets, this is very important. Investable assets, then you can be a potential client for a private bank. Now, one thing that's very important, and I really want to emphasize this here: you need to talk to your bank. All right, there are a lot of perks and privileges that come with private banking, and privacy, as the word entails, private banking. Privacy is the primary benefit of private banking, right? So customer dealings and services provided typically remain anonymous. Private banks offer high net worth individuals with tailored proprietary solutions, and a lot of those solutions are kept confidential to prevent competitors from luring a prominent customer with a similar solution. So you would see a lot of anytime you want to open a private bank account, what will happen is that your bank, your financial institution, will direct you to another department, and you will be taken care of by somebody who is specialized in this type of service. So because again, banks are trying to protect their proprietary products and solutions when it comes to private banking. Now, private banking clients typically receive discounts or preferential prices on products and services. For instance, they may receive special terms on prime interest rates on mortgages. So if you are a private bank client at your bank, maybe you would receive your mortgage will be 1%. Your mortgage interest rate will be 1% less than the average. You might receive specialized loans that apply to your particular situation or line of credit. So, and again, as a client of private banking, your savings or money market account might generate higher interest rates, and they may be free of all the fees and overdraft charges. Now, some banks, especially in the United States, I'm not going to name names here, but you know, I'm talking about the big names, the Bank of America, the JP Morgan, the Citibank, the Wells Fargo, and so on and so forth. If you are a client of their private bank department here, as a client, you might, and if you operate an import-export ventures, you might actually get away with foreign exchange fees. So you're not going to be charged any foreign exchange fees. So this is all those things really add up. Really, it depending upon your particular situation, those fees and those perks and those savings really add up. So private bank is the number one financial institution that helps people become multimillionaire. Number two, investment banks. Now, investment bank. What is an investment bank? Now, an investment bank is a financial intermediary that performs various services. Now, most investment banks in the United States, especially in the developed world, specialize in large and complex financial transactions, such as acting as the middleman between a securities issuer and the investing public. They facilitate mergers and acquisitions. They do underwriting. So basically, you might say, well, this is geared toward an institutional clientele, but not really. Why? Because a lot of investment banks have private banking arms, and some even have asset management arms. So they are able to offer, for instance, if you have an IPO, an initial public offering, which is the first time a company is issuing securities, stocks, as an investment bank client, as an individual, that is, you might receive first notice, you might receive a preferential treatment when it comes to allocating to you some of those shares. Now, those shares will be at very, very good rates because they are pre-sale. So for instance, if you have company X that has to file an IPO and the IPO price is $25, you might actually buy the share at 25. Now, check this out. When the shares hit the market, the shares might jump to 30 or 35 or 40. So you are realizing a $15 per share profit. So it is very interesting to be a client of an investment bank. Now, of course, when it comes to investment banks, the threshold in disposable assets goes a little higher. Here, we're not talking about 50,000 here. We're talking more, sometimes $500,000 or even $1 million, because investment banks traditionally deal with institutions, but if they have to deal with individuals, those individuals better be, loaded in terms of cash, right? So again, in the United States, even globally, major investment banks include Credit Suisse, Deutsche Bank, Citigroup, Bank of America, Morgan Stanley, Goldman Sachs, JP Morgan Chase. Now, one thing you have to understand is that some investment banks specialize in particular industry sectors, right? And many investment banks also have retail operations that serve small individual customers. That's what I said earlier. Now, here I'm not going to spend too much time explaining the kind of work that investment banks do primarily, because we have a whole show dedicated to that topic. But just so you know that investment banks help individuals become multimillionaire. We'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. We're still continuing with our compilation of financial institutions that help people become millionaires and multimillionaires. Before I quickly go to number 3, I want to give a shout out to Jess Lloyd in Sandy Springs, Georgia, Elizabeth Price in Dunwoody, Georgia, and Yasmin Burns in Roswell, Georgia. Jess Lloyd, Elizabeth Price, Yasmin Burns in Georgia. Really appreciate it. Institution number 3, family offices. Now, what is a family office? A family office is a private wealth management advisory firm that serves ultra high net worth investors. Now, this kind of institutions are different from traditional wealth management shops because what they do is they offer a total outsourced solutions to managing the financial and investment side of an affluent individual or family. For instance, many family offices, especially in the United States and Canada, and I think also in much of the developed world, they offer things like tax services, wealth transfer. I'm talking about estate planning, that kind of stuff, the fiscal facets of wealth transfer, family-owned businesses, charitable giving. So anything that is philanthropic related, anything that is philanthropic related, they will take care of that. Insurance, of course, budgeting, right? So again, I spoke here about what? Ultra high net worth. Now, the threshold here is high. Yes, some start at $250,000 to $500,000. The thing is that in the last 5 years, we've seen in the industry that we've seen a new crop of family offices that are offering services to the low end here. So people with $100K in disposable assets can actually tap into that kind of tap into the expertise of family offices. So you still have a chance to enlist to get into their roster of clients even if you don't have $1 million. Now, some high net worth individuals may want to consider opening a family office themselves. So, if you believe that you're comfortable and you can actually open a family office, it's pretty simple. You just have to enlist the services of people who are already in the industry. And the good thing here is that by opening your own family office, you can actually even seek clients from other rich clients, other wealthy clients to come join your family office, and you can manage, not you, but the pros that you're going to hire will be managing the wealth of those clients. Now, you can even do a collab because most family offices combine asset management, cash management, risk management, financial planning, lifestyle management, tax management, and other services to provide each family with the essential elements for addressing the significant issues it faces as it navigates the complex world of financial management. So the point here is that if you know several families, or if you know 2, 3, 4 families who are doing pretty well financially, you guys can actually gather into a family office. And again, if you are not financially savvy, you can hire people who know what they're talking about when it comes to finances, and they will manage the cash for you. So that's really in a nutshell the essence of a family office. One thing I also want to talk about here is that family offices also manage something called lifestyle management. Now, lifestyle management is very important when you get into a certain level, finance-wise, certain level, wealth-wise, right? So I'm talking about things like you want, personal concierge. You want someone to handle your personal affairs, somebody to cater to your lifestyle needs. Things like personal security for home and travel, aircraft, private jet, yacht management, travel planning and fulfillment, and a bunch of other stuff. So this is very important if you're a busy person and you need that kind of assistance. Then a family office can take care of that. Now, number 4, private wealth managers. Now, private wealth management think of it as an advisory practice that incorporate everything, that incorporate a lot of stuff actually. Incorporate portfolio management, financial planning, right? And tax planning, estate planning, and so on and so forth. Now, private wealth management aggregates services that not only touch on the short term here, but also the medium and long term. Now, the good thing here is that the difference between private wealth manager and wealth managers and family offices, for instance, is that private wealth managers focus on only you, whereas a family office might be focused on an array of clients unless it's a family that is large, that's wealthy enough that they own their own family office, right? Now, let me give you different types of private wealth managers. You have banks and large brokerage houses, portfolio managers, independent financial advisors, and those people and institutions focus on high net worth individuals. So again, the goal here is to let you know that those people focus on high net worth individuals, but you don't have to be loaded financially to start benefiting from their services. The key idea here is to hang out in circles where professionals who already cater to those wealthy people hang out at, right? So the first step here is to start talking to your bank and ask them what kind of services they have, what kind of private banking services they have, what kind of private wealth management services they have, what kind of portfolio management services they had, and that kind of stuff, right? So private wealth managers provide expertise and guidance across a vast spectrum of investments. And this includes equities, stocks, fixed income, I'm talking here bonds, and alternative investments. The alternative investments, we have a whole show about that. This includes things like commodities, real estate, art, luxury, wine, this sort of illiquid, this sort of rare investments. All right. I will be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. We're still here talking about money, how to make money, how to preserve money, how to maintain cash and wealth throughout your life. If you like this kind of topic, this kind of content, you think we're adding value to your life, please consider subscribing to our channel right now, and we'll really appreciate it. We drop new programs every day. We really we do a lot of research to make sure that we provide the best quality of content right there. Please subscribe to our channel. Of course, like I said before, please like this content, share it, and comment below. Let us know your experience when it comes to wealth management. If you know of any other institution that caters to the multimillionaire. Now, quickly want to give a shout out to Kieran Collins in Oakdale, California, Kira Smith in San Francisco, California, Eve Baker in San Jose, of course, in California. Eve Baker, Kira Smith, Kieran Collins in the great state of California. Really appreciate it. Number 5, real estate fund. Now, real estate fund are professionally managed portfolio of diverse holdings. All right. Now, most real estate funds invest in commercial or corporate rental properties. Now, sometimes they might do residential investments, right? Now, the thing here is that a real estate fund can invest directly in properties through something called real estate investment trust, REITs, or indirectly. In other words, they could just take the cash that you put that investors give them, and they can just buy on the open market a REIT fund, a real estate investment trust fund, right? So like stock funds, real estate funds can invest domestically, internationally, or both. And the good thing here is that if you are if you want to diversify your income sources or your portfolio, you might want to check them out. You might want to reach out to a real estate fund because of the fact that if they are investing in the domestic and international market, that allows you to diversify, to sort of tap a little bit into, to get some return from overseas also. So this is a very important thing. Now, when it comes to real estate funds, one thing that you need to remember here is that they tend to follow the mainstream economy here in terms of performance, right? So if we have a period of inflation and economic growth, those funds will usually post wonderful returns. Now, if you have a recession, as we had in 2008, for instance, their performance will fizzle. Now, it's all about your risk profile, and it's all about your personal financial situation. So make sure that whatever you do, you always talk to a financial advisor, or if you are financial savvy yourself, then you kind of look at the broader picture here, right? Now, you have to understand one thing also is that real estate funds tend to be more volatile than broader based growth funds or income funds. So, again, as I said before, you might be hit hard if in these funds, that is to say, when the market collapses, right? So a lot of investors lost money, of course, in the subprime meltdown of 2008, but of course they rebounded afterwards. It's all about your financial situation and your risk profile. Now, number 6, asset managers. There is something called asset managers or asset management company. Now, an AMC is a company that invests pooled funds from clients. And what they do is they put the capital to work via different investments, including stocks, bonds, real estate, limited liability companies, and more. What they usually do, they require people to be high net worth and to have a lot of money. But again, historically, AMCs have been able to accept people with lower thresholds. So if you have 50K or 100K, depending on your situation and your prospects of future wealth, they might accept you. So I'm talking about companies like T. Rowe Price, Fidelity Investments, Vanguard Group. They specialize in asset management. And if you want to grow your portfolio over time, you might want to, just check them out. They basically, they have a website. They usually even post the returns of their investment, so you can actually gauge their performance over 5-10 years and see what kind of stocks, what kind of sectors they have invested in, that kind of stuff. So again, the idea here is to do due diligence, to do your own homework before getting to those kind of funds. So asset managers were the number 6. So number 5, real estate funds. Number 6, asset managers. So this is basically it. So we'll be right back right after this. But before we go, just want to quickly give, for those who just joined us, right? We're talking here about 10 banks and financial groups that specialize in helping people become multimillionaires. And here is the context of today's conversation. Wealthy people tend to take a different approach to managing their money. Research shows that the rich and the ultra rich set themselves apart from the average Joe, chiefly when it comes to banking, investing, and saving. Individuals with a high net worth are keen on adopting specific banking habits that allow them to manage their cash properly, rub elbows with other like-minded investors and bankers, and be exposed to unique and profitable investment opportunities. In this program, I'm talking to you about 10 banks and financial groups that specialize in helping people become multimillionaire. Even if you're currently not rolling in an ocean of cash, you can still contact some of these institutions and learn to apply some of their tactics when dealing with your own personal finances. We'll be right back right after this. Welcome back, folks, to another edition of Sweetie Kiwi. We are wonderful. We are doing wonderful. I hope you are doing fantastic also. And we are continuing on our compilation of those institutions that help people make a big bang here. So before I do that, let me quickly give a shout out to Jess Griffiths in Apalachicola in Florida. I love that name, Apalachicola in Florida. Sarah Carter in Kentville, Florida, and Jasmine Morris in Tequesta, Florida. Really appreciate it. Thank you so much for your support, for your feedback. We really appreciate it. Let's just jump right into it. Number 7, private equity firm. Now, a private equity firm does a lot of stuff. Now, before we talk about private equity firm, let's sort of define what is a private placement. Now, private placement refers to the sale of shares or bonds to pre-selected investors and institutions rather than on the open market. If you think about it, we talked about what an initial public offering is, right? An IPO where you come to the market, to the larger market, and you sell shares, right? So at that point, everybody can buy them. But a private placement is just, if you will, the opposite or the alternative to an IPO. So if you have a company, let's say a company wants to raise cash, right? And because they want to raise cash for expansion. What happens here is that investors, again, here we're talking about pre-selected investors and institutions. They are invited to participate in a private placement program. Now, this programs usually involves institutions such as pension funds, right? Insurance companies, mutual funds, banks. And when it comes to individuals, you're talking about wealthy individuals or well-connected individuals. Again, sometimes it's not about having the cash, having $1 million or 10 million or 20 million or 100 million in the bank account. Sometimes it all boils down to what? Connection. Are you connected? Or do you have bankers in your entourage? Do you rub elbows with investment bankers? Right? So you want to be at the right place at the right time. So a private equity firm, what they do is they participate in private placement programs. So they try to buy shares in the private market, not in the open market. And you don't have to own a private equity to make money. All you got to do is place a little bit of your cash with a private equity firm, right? Now think about it. This is huge, right? Because imagine you were part of a private equity firm, a PE firm that invested back in the days when Google was just Google, or when Facebook was Facebook. Those private equity firms that invested back then, they made a killing. They made tons of cash. I mean, I'm talking about 1,000% return or even more. Imagine you invested about $1,000 in Facebook, and you bought the share, say, at $5, and the share's value today, I don't even know, but the share, just for the sake of an example here, imagine the share is now $500 so on each $5 that you invested, you are getting $500 in return. That's actually you're actually getting $495, and even less than that if you take the PE firm, their fees, right? But the bottom line here is that either way, you're making money, right? You are making money. So participating in a private equity firm or being a client of a PE firm helps you. So a PE firm helps people become multi-millionaire. Number 8, hedge funds. Now, I know a lot of, sometimes when we hear about hedge funds, sometimes we hear about bad news, but hedge funds do a lot of good stuff in the economy, particularly when it comes to helping people become multimillionaire. Now, I'm not saying that all hedge funds are ethically correct here. In every industry, you have the majority who abide by the rules, and you have a tiny minority who basically want to cut corners, right? Now, hedge funds constitute a great institution when it comes to helping people become multimillionaire. Now, the thing is that a hedge fund is only open to quote unquote accredited or qualified investors. And if you want to invest with them, you have to meet certain net worth requirements. Usually you got to have a net worth exceeding $1 million in investable income, investable asset. I'm not talking about your primary residence. No, that's $1 million that is just sitting in the bank account that's just waiting to be invested, right? Or if your annual income is over $250,000, they might consider you. Now, in the last few years, in New York, in LA, in Chicago, in Hong Kong, in Tokyo, in Paris, and in other sort of wealthy enclaves in the world, you've seen an emergence of hedge funds that allow individuals with as little as $100,000 in an investable asset to jump on board. In other words, they accept clients that are less wealthy. The good thing here is that you always want to research the hedge fund first, or you want to ask around. You want to ask your banker, you want to ask a financial advisor, because hedge funds are very good when it comes to increasing your wealth. But the problem is that you want to check their performance over the last 5 years, and most importantly, you want to check their performance fee. All right, because they charge a performance fee. Now they also charge something called an expense ratio, but the performance fee is really what really, I would say, that could be a killer. For instance, there's something called 2 and 20. In other words, they charge 2% asset management fee and then a 20% cut on any gains generated. What does that mean? It means that if a hedge fund has, say, 100 million in assets, they charge a 2% to cover operational expenses. So 2% of 100 million will be 2 million. So that 2 million is going to help them, like, pay for things like, payroll, rental, office rental, that kind of stuff, right? It allows them to operate. And then if they make a profit, if they make a gain, they take another 20% cut, right? So if they generate, say, $10 million in capital gain during the year, right? So 10 million of 20%, that's 2 million. So they would take a 2 million cut. All right. Now, when it comes to hedge funds from an investment perspective could be interesting because they use a variety of strategies when it comes to investing. So they use things like, macro, equity, activism, relative value, or distressed securities. So by being diversified, that really allows you to also diversify your own portfolio here. Okay, we'll be right back right after this. Don't go anywhere. Don't go anywhere. Welcome back, folks, to another edition of Sweaty Kiwi. We're still here talking about 10 banks and financial groups that specialize in helping people become multimillionaires. Number 9, venture capital firms. Now, before we talk about venture capital firms, please do me a favor. If you like the content we've been sharing with you so far, smash the subscribe button and turn on the notification bell so you can be kept in the loop whenever we drop a new show. Please like this content, share with your friends, family, and colleagues everywhere. We want people to know that there are banks and financial groups that specialize in helping people become wealthy. Please comment below, give us your experience, and also please watch our ads. This show is ad supported. We depend on the resources from the ads to be able to expand our lineup of programs, to hire more people, to upgrade our equipment, to finance the trips, and for all the investigations that we have to do. Thank you so much. We really appreciate it. Shout out to Reggie Roberts in Clover, South Carolina, and shout out to Heidi Smith in Columbia, Forest, South Carolina, and Ellie Lloyd in Fairfax, South Carolina. Thank you so much. Venture capital firms. Number 9. What is venture capital? Now, venture capital is a type of private equity, and investors provide this sort of capital to startup companies and small businesses that they see as long-term growth potential. So usually venture capital comes from well-off investors, financial institutions such as investment banks, and pension funds. Now, the difference between a venture capital firm, a VC firm, and a PE, private equity firm, is, if you remember, private equity happens at the inception. In other words, there is a company that needs money. They sell shares in the private market. Venture capital, they come once the company is already established. Okay, so the company is already established, and the investors believe they are a long-term growth potential, and they will invest in them. All right. Now, the good thing here is that venture capital firms, with the money they raise from investors, they can invest in various markets and in various sectors here. I'm talking not only in terms of industry, but also in terms of country. So again, the thing here is that you want to have diversification in your portfolio, right? So if you have a VC firm, if you're a client of a VC firm that invests in the States, in India, in South Africa, in Brazil, in Russia, in China, the good thing is that if you have a lethargic market in the United States, you might have a very good market, a very profitable return in Asia, for instance, right? In China. So if you have 2% portfolio growth in the States, you might have 12% or 20% in China. So at the end, all this sort of different portfolios, different investments balance out, and they balance out to give you a nice return, a nice ROI. So a VC firm is number 9 on our list. Now, in a typical VC deal, large ownership chunks of a company are created and sold to a few investors through independent limited partnerships that are established by VC firms. Now, one thing you have to understand here is that sometimes these partnerships consist of a pool of several similar enterprises, right? So for instance, a VC firm might buy a bunch of, say, grocery stores chains in Asia. They might buy it in Vietnam, in Cambodia, in South Korea, in Thailand, and sort of bundle all of these companies together and sell their shares, actually sell their shares to individual investors and institutions. And again, this is pretty lucrative. Historically, the return the VC firms have returned 30%, 40% to their investors on an annual basis, and this is way more than what you can find on the open market, stock market, whatever. Right now, of course, the goal here is not for us to give you investment advice, because we do not specialize in providing investment advice. Right? What we do here is we try to expand your view, expand your horizons, so you know what's available out there, and you can make your own investment decisions based on your situation and based on potentially the advice of a professional you would have hired. Okay. Number 10, liquid alternative funds. Now, what are those? I mean, the name sounds pretty funny, pretty interesting, but yeah. Liquid alternatives are alternative investment strategies available through vehicles such as ETFs. ETF stands for exchange traded funds, mutual funds, and closed-end funds. Now, the good thing here is that those liquid alternative funds, as the name implies here, they provide daily liquidity. Right? Now, these funds, they're also called 40 Act funds because they were actually created by the U.S. Congress in 1940. Now, the reason why this happened back in the days was that Congress realized that people, in the war, after the war or during the war, needed to have liquidity, among other things, right? So they made it specifically so that investors can put their cash into this kind of product or vehicles and get daily liquidity. Now, launches of liquid alt funds tripled from 2010 to 2015. Now, from 2015 to 2020, they have quadrupled. And you have various reasons for that growth. Number one, 2008 financial crisis. A lot of investors were just scared. That crisis scared the hell out of investors. So people started looking for alternatives here. And people realized that you can still make money, but not just focus on the real estate market or just the financial industry. And more importantly, you can get daily liquidity. So you can take your cash on a daily basis, right? And another reason for the uptick in alternative investment funds launches is the fact that we live in a globalized economy. And investors in the United States and Canada, for instance, want more. They want the diversification. So if you have a liquid alt fund that is geographically diversified, it will get most of the cash. Another thing also that explains the growth in liquid alt funds here is the fact that you have a parallel economy. So we have the digital economy, you have the real economy, and you have the online economy. So the percentage of business happening online is just growing by leaps and bounds. So because of that, investors are realizing that you have a whole new economy, the e-economy, that will be the launch pad for future growth. So you have sometimes I'm not going to name names here, but you have banks and financial institutions that sell those sort of liquid alt funds that focus only on the e-economy, on the online economy. All right, I'll be right back right after this. Welcome back, folks, to another edition of Sweetie Kiwi. We want to give a quick shout out to Terry Snow in Pleasant Hill, New Mexico, Danny Stuff in Bayard, New Mexico, and Haley Moody in Pueblo of Sandia Village, New Mexico. I love that name, Pueblo of Sandia Village. Shout out to all the villagers of Pueblo of Sandia Village. We really love you. We appreciate it. Thank you so much. Now, I quickly want to give you a recap of what we're talking about today. We are talking about 10 banks and financial groups that specialize in helping people become multimillionaires. The context of today's conversation is that wealthy people tend to take a different approach to managing their money. Research has shown that the rich and the ultra-rich set themselves apart from the average Joe, chiefly when it comes to banking, investing, and saving. Individuals with a high net worth are keen on adopting specific banking habits that allow them to manage their cash properly, rub elbows with other like-minded investors and bankers, and be exposed to unique and profitable investment opportunities. In this program, we uncover 10 banks and financial groups that specialize in helping people become multimillionaires. Even if you're currently not rolling in an ocean of cash, you can still contact some of these institutions and learn to apply some of their tactics when dealing with your own personal finances. Now, what are those 10 institutions that I talked about? Private banks, investment banks, family offices, private wealth managers, real estate funds, asset managers, private equity firms, hedge funds, venture capital firms, liquid alternative funds, also called liquid alt funds. Now, this was the recap here. Now, let me first kind of talk to you. What is today's call to action here? It's all good to know those financial groups that specialize in helping people become a multimillionaire, right? But to take the first step to becoming yourself a millionaire or a multimillionaire, if you're not already one, you want to determine your net worth. So determine your net worth. Figure out your financial needs. I'm talking safety, retirement, estate planning, lifestyle, and so on and so forth. You want to assess your risk profile. Are you a risk-averse individual or are you a risk taker? Seek the expertise of a professional. And this is very important, folks. As I said earlier, we do not provide investment advice in this show, right? This is not our specialty. Our specialty as a general information show, we open your eyes, we open your mind when it comes to the possibilities out there. But you want to seek the expertise of a professional. Here I'm talking about a wealth manager. He or she can be a financial advisor or a private banker. Invest in a vehicle that is suitable for your financial institution. Not only your financial institution, but also your financial situation and goals. Why? You can't go to a hedge fund or a PE firm or a VC firm that does not specialize in the kind of investment you want to make, right? So that the vehicle has to be suitable for your financial institution as well as your financial situation and goals. Now, when it comes to choosing an advisor, financial advisor, you got to think about a few things, right? Please ask yourself or ask the advisor how they make their money. In other words, is his or her service commission-based, fee-based, or fee-only, right? Because if you have, for instance, if you have an advisor who makes money on commission, for instance, I'm talking about brokers, insurance agents, registered representatives, they might be tempted to sell you anything, because if the bottom line is only to make some commission, it's all about volume, right? They need to produce volume. So they might not be, again, every situation is different, but historically, commission-based advisors have not always provided quality advice to clients. So you want to go for a fee-based or fee-only based, all right? Determine how much help you need, right? Do you need just a limited financial planning service, or do you need comprehensive financial planning guidance? Do you need asset management? That kind of stuff. Now, there is a website called napfa.org. This is N as in Nancy, A as in Apple, P as in Peter, F as in Frank, A as in Apple.org. So NAPFA is really the country's leading organization when it comes to advisors. All right, so you might want to check them out. NAPFA stands for the National Association of Personal Financial Advisors. All right, we'll be right back right after this. Don't go anywhere. All right, welcome back, folks. That's it for today. And I want to give you a pro tip before you go. Managing your wealth is like raising children. You don't know how to do it because you've never done it. By the time you know how to raise children, the kids are grown. So managing wealth is similar. It entails planning, patience, faith, risk-taking, and emotional balance. Good luck and cheers to your wealth. Thank you.